The following is a presentation of TFNN. The Trader's Edge with your host, Steve Rhodes.
Good morning from TFNN. Welcome to the April 29th terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the newsletter that is the intelligence for creating your financial freedom. Good morning, folks. Hope everybody out there had a great day, a great evening. My outcome, as always, though, it is to teach you how to master the tools of trading, and that includes the tools of the mind, because our mind is the one thing that you and I, the one thing that we can control. So let's go look at our tools. This is the tool I call self-control wins the race. You know, can you imagine what it was like to live in the day when it took a month to cross the Atlantic, or when you might have had to wait 6 months in San Francisco for a letter to arrive by Pony Express from New York, or when you had to travel over a bumpy road to the nearest town to buy a pair of shoes? Actually, I can remember that one. Fast forward to today's world, and it's our cutting-edge technology that allows us to do almost anything instantly. Many of you are listening and watching this morning's show on your smartphone-type devices, your pads out there. Technology and speed, it's simply incredible. So, what do we do with the fable about the hare and the tortoise? Because in that fable, the tortoise eventually got tired of the hare telling him what? Just how fast he was. Speed. Interesting. So the tortoise gets tired of the hare telling him just how fast he was, and he challenged the hare to a race. Now, in that fable, the hare stopped to take a nap before the finish line, and the tortoise eventually won the race. The tortoise made up for his lack of speed with an abundance of determination and what? Discipline. The tortoise realized that the natural gifts will only take you so far, and that in the long run, using what you have to the fullest degree is the way you attain lasting success. Said another way, it's not what you have, but what you do with what you have that really counts, folks. Like the hare, the best and the brightest often resemble fireworks. They dazzle onlookers with their spectacular display, but they lack the staying power for real accomplishment. Be like the tortoise, not the hare. Keep an eye on the goal and your feet on the ground, and you'll be able to go the distance in anything it is that you choose in life. Sure, we are tempted by instant success, but history has proven that the slow and the steady translates into lasting progress over the long term. The greatest things ever done on earth have been little by little, and that includes even today's technology. Slowly and steady progress, folks. That's what builds the wonders of your world. Self-control, it will win the race. It is Terrific Tuesday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Let's get things kicked off here. Right now, we got Dow futures are trading up 43 points, trade out at 16,440. S&P futures up about 5. They're trading out at 1870.75. NASDAQ futures up 7.5 points, trading out at 35.48. King dollar on the move this morning, up 8 ticks, trading, or 8 cents, I should say, trading up at 79.84. We got Goldilocks back, $3, trading out at $12.96, and a little bit of change. Silver down 17 cents, trade at $19.41. Light sweet crude trading out at $101.76. That's up 90 cents out here. A quick peek across the globe. Let's see what we've got over here in Europe right now this morning. They're having Oktoberfest a little bit early. DAX up 118 points, up 1 2/10%. The FTSE up 52 points, up 0.8%. Over in Asia last night, the Nikkei traded down 141 points. I was down almost 1 full percentage point. It closed at 14,288. Hang Seng had a different party in mind. It was up 321 points, up 1.5%. Shanghai up 0.8%, up 17 as well. So where do we begin our day? Boy, a lot of interesting things going on this morning as I take a look at the stock charts. Probably you too as well. I got to start with your friend and mine. That's the Euro-Japanese yen. Boy, this morning at about 7 o'clock, 7:30, the Euro-Japanese yen was just absolutely on fire. Looked like it was getting ready to move up to the top of its little wedgie that it is forming. Yes, it's forming a rising wedge pattern out here that actually has bearish implications, but and there's really two trend lines that I've drawn here. I've drawn one trend line coming off of the December 27th high. Remember, our markets, in essence, made a high on December 31st out here. And then they pulled back, right? Came back from that nice New Year's Eve party on January 2nd. The markets, They started to dive downward. In fact, in some cases, like in the case of the NASDAQ, began the downtrending market that is currently in place out there. Same thing in the Russell, too. Well, it didn't maybe not December 31st, because the NASDAQ actually went higher. But anyways, let's just take this. Let me just back up just for a second. Let's just focus in on this one chart here. And that's the Euro-Japanese yen, because we want to get our grips on what's going on out here. If we take a look at the high from December 27th, I've got really two different touch points for trends out here. The first one's going to be the 0.786 Gartley sell pattern that it formed, and that was on the trading session here on March the 7th. That high out there at 143.77 out there. It's a really good trend line. Why do I say it's a really good trend line? Because we've seen the price pierce through that area that actually forms the second trend line. That was the high on April 2nd. That's when it formed that little doji in Stevie's window out here. And then we saw a little bearish engulfing candle the very next trading session. We saw an intra-spike high into that second trend line. That is the red area. So far, it is the blue line, the blue trend out here, that is containing price. Now you can see that we're trading down into a very narrow cone out here. And that's why, our markets have been whipsawing back and forth. You can see that the euro-yen, in essence, has been like the tortoise, kind of steady as it goes out here, not really willing to break one way or the other out here. If you're wondering why futures were up this morning, if you're wondering what took place in the market yesterday where we saw a big whipsaw, remember the euro-Japanese yen never broke its rising trend line out here. That's the red line on the bottom. So even as the markets were pushing lower yesterday, the liquidity gauge of the markets was saying, hey, not so fast. And we saw, you can blame it, or you can try to identify. I know a lot of folks will try to identify it to the news reports of what's going on over in the Ukraine and Russia, what have you. But if you just stayed focused like the tortoise, if you just stayed focused on the stock chart and you got rid of all that noise out there, the stock charts are actually sending you the more important messages of what's going on. The links, you want to take a look at stock market is what? It's nothing more than cash chasing stocks or equities out here. We're certainly taking a look at the indexes. And so that being the case, don't you want to know when the spigot is open? Don't you want to know when the market is being flush with water or flush with cash out here? Well, that's why we take a look at the euro-Japanese yen. So what does that say? It's interesting. What it says here is that it's rejected higher price. You got our markets, futures are up right now. Maybe these futures here will not hold. Maybe we'll see some selling come in. Now, to whatever extent any selling does come in, now, also, there's room to run up to the high. There's no reason for the euro-Japanese yen not to go spike up the highs. And I can make the case that the sell-off that we saw was just simply because of an overbought condition inside of a market that needed to be worked off. I believe I can make that case. Let's go take a look at the case. Let's go even see if that case is even out there. Well, if we take a look at the 120-minute chart, it looks to me like the case was out there. Take a look at the high. As the high was being made at 7 o'clock this morning, we saw the euro-Japanese yen get where? If we take a look at that, in this 120-minute chart we're looking at, if we take a look at a 14-period relative strength indicator, it's a beauty out here. You can see price got above the 70% line. You get above 70, you start to move into what? Into an overbought condition. Price then has to work its way up. It's going to do that by doing one of two things. It's either going to be moving sideways or it's going to be moving lower out here. Well, we saw a little bit of a push lower. So it pushed lower. It just simply let the air out of its tires out here. Maybe it's just getting ready to recharge. If we take a look at its retracement that it's done here, and we're looking at the retracement coming off of this C point of a potential A to B equals CD to the upside. And at this stage, I have to say that is still in place out here, that pattern. We'll come back and take a look at that pattern. But if we go from the low, 141, 141.98 at about $2,100, what's that make it? 10? 9 o'clock? 9 o'clock. I know I could figure that out. 9 o'clock in the evening out here. If we go from that low to the high that came in at 7 o'clock this morning, we'll see so far the retracement about a dead cat bounce. Coming back to the 0.382 retracement level, 141.90, 89-ish. We're trading at 141.92 right now. So it's made that first potential move down. It could easily move down to the 141.57. Now, if it gets there, if 141.54, if it gets down there, no reason for it to not go test the bottom of that red line. That is really the, I didn't mean to do that. There we go. The bottom of that little rising trend that we are taking a look at out here. But there is a 1-to-1 A to B equals C that's still in place. I could take this currency pair up to the 142.75-ish level. If this market's going to move higher, it's going to certainly need to. It's going to want to see the Euro-Japanese yen, in fact, do that out there. Now, that is what's going on an intraday chart. Well, that's what's going on a daily chart out here. Let's go back and take a look at Goldilocks and silver. We've got a lot of folks following those commodities. Yesterday, we were watching gold, bump its head into the trend line out here as well. Now, this is a short-term trend line. That's the green line that you're looking at on my screen. That's the one coming off of the highs out here from March the 17th. That high at 1392.60. The next touch point on that trend is going to be your April 14th high out at the level of 1331.40 out here. We can see yesterday, price was not able to get above that area. Rejected that. We're going to watch to see if gold can get above that again today. If you were to see it close above the level of, we'll call yesterday's high, let's call it 1307. You're trading at 1295. Should be easy to do if gold is going to break this trend to the downside. If it's not, and if it doesn't, it really potentially sets up an A to B equals C to the downside, but not until it breaks below 1277.40. Dow futures up 44, S&P up 5, NASDAQ up about 10. We'll be right back, folks.
Yeah, it's always better when we're together.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back. So, I was telling you the story of the tortoise and the hare. And, of course, really it applies to the markets out here. As I was thinking about my morning open, I was thinking about just really the divergence that we have inside of the market. Because I know that you're listening and you want to know, hey, where's the market going then? Okay, you talked about the euro, Japanese yen, and where's the market going? And really, this is the story of the tortoise and the hare as we take a look at the markets. The hare out here is going to be the NASDAQ. That's going to be the faster. That's technology, right? So we take a look at what the hare is doing in the marketplace. And I've got the NQ. I've got the daily chart for the NASDAQ up on my screen out here. I like how I link the known to the unknown. Fastest way to be able to teach anybody anything. Always link the known to the unknown. All we're doing is we're telling story. That's what the markets are doing. After all, the markets are telling stories to us each and every moment, depending on the time frame that you're looking at. Stay inside your time frame of trading out here. And all I am is really just a storyteller. I'm telling you what it is that I'm seeing the story behind the move inside the markets. And that story, as we take a look at the NASDAQ, as we take a look at the hare, as we take a look at speed out here, that's clearly in a descending price channel. And so you've got several thousand stocks, in essence, that are, if we take a look at the NASDAQ composite as an example, that are telling you that the change in trend out here is to the downside. Now, what would change that trend? What would change that trend is the NASDAQ busting out that descending price channel. Of course, it would be a combination of busting it out, coming back and testing it, and then confirming that it wants to stay out of that price channel. Where are we now? Well, right now we're sort of in a mid-stroke. We've got real, big sell signal signs. Those are the key reversal days, each of them forming the tops, in essence, of that descending price channel out here. So the hare is telling, the question is the hare going to take a nap? Just like in the story of the tortoise and the hare. Yesterday was an opportunity to push lower. We'll take a look at the Qs and other things out here. So, yes, there was an opportunity to push lower, and behold, it did. And, of course, it was fought off, and was fought off by what? It was actually fought off by the Dow. So you had several thousand stocks. It was the Dow that actually gave the reversal signal yesterday afternoon when the market turned. You say, how do you know that, Steve-O? And that's an excellent question. I will show you how I know that. How I know that and how you know that is from strength. We learn from strength and we learn from weakness. And as the Dow futures yesterday were pushing lower, this is a 2-hour chart that we're looking at, as they were pushing lower into that 2 o'clock time frame, that's when we saw the reversal take place. They were pushing lower with what? With less relative weakness. When you push lower, if the move is going to be real, you're going to be able to, not you, I'm talking about the market now. The market is going to be able to push lower with more weakness, not less weakness. Now, just by the mere fact that it's pushing lower with less weakness, that doesn't mean it turns right then and there. You need to be able to understand what the sign builders in the market are communicating to you. You need to understand that. Yesterday, I threw out a kind of like a trick question. We were taking a look at whether, and I can't remember which chart it was on. I think it was the NASDAQ, and we looked at a candle as we were coming into the 11 o'clock close out there, and I asked the question, does that look like a hammer candle or does that look like a hammer candle? Most people, I'm sure, rose their hands and said yeah, or raised their hands and said yeah. And of course, the trick question was, I knew it wasn't a hammer candle. I knew that it was a bearish engulf. But let me just get back on this. We're looking at the Dow futures out here. The Dow yesterday truly gave the buy signal. So you got 30 stocks, in essence, taking on 3,000 stocks or more inside the NASDAQ composite. So there, and clearly the Dow is the tortoise. You can't say that the Dow is the fast-moving hare out here. There's no way. It's big, gigantic, large-cap companies that are out there, but yet large enough to go ahead and turn the market around. I can tell you right now that the Dow is still in a nice bullish mode out here on a 120-minute time frame, even though it's given back some of its gains as we speak right now. So here's the whoops, I didn't mean to do that necessarily. Let's come back and take a look at, let's come back now. So we've taken a look at the NASDAQ. We've taken a look at the Dow. And you can see there's divergence here because the Dow, well, I didn't take a look at the daily chart, but let me do that. Let me do that real quickly here. If we take a look at the Dow just traveling with inside a nice, what is it, about 600-point consolidation. Looks like it actually wants to come back up and test the highs out here, right in the range of maybe about 16,513. Of course, if it closes above the consolidation, that would be extremely bullish out here. If we go take a look at the ES Mini, let's do that here real quickly. ES Mini, let's take a look at what it did yesterday. As price was pushing down yesterday, all it did was tested the top of its consolidation pattern, a biggie, 112-point consolidation pattern. It is getting more and more difficult to see who is really going to win this race, the tortoise or the hare.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say You can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
And we're up to the races. We got the Dow up 76 points, trading out at 16,525. The S&P up 8, trading at 1877. Composite up 17 points, trading out at 4,091. Looks like the leader in the clubhouse this morning is the Russell 2000. The week index taking the lead out here by more than a nose. It's up 0.6%. Up trading out at 11.23. Apple back 37 cents. Microsoft up 20 pennies. Google up $3 and change. Leading the charge dollar-wise to the upside. Orbital Sciences, ORB, is the ticker symbol. Looks like it is going to, it looks like this may be a spin-off or something, merge aerospace and defense with Orbital. ATK to spin off Sporting to merge aerospace and defense with Orbital. CMI Cummings Inc., that's up 4%, up $5 and change. Google's up about $4. Westlake Chemical, WLK, is the ticker symbol, up 6%. Zillow up 3.5%, up $3 and change right now. IBM up a couple of dollars. Questcor Pharmaceuticals up $1.61. Allergan, AGN up $1. Leading the charge, Schlumberger up $1.72 out there. I don't know what ExxonMobil is doing, but boy, that XLE, it is just simply on fire. Shire PLC SHPG down 5% off $9 out here. Maybe they were out with numbers here before the bell. I don't see that. Chart Industries, GTLS, they were out with numbers. They're down 7% out here. Generated sales of $266 million versus $273 from the prior year. Net income was $11.9 million versus $15 million. They're trading down about 7% right now. Checkpoint Software also down 7%. CHKP is its ticker symbol. I don't show the numbers on there. Coach, COH. The ticker symbol, it's down about 8% off $4. They were out with numbers. Looks like their third quarter profit declined out here. Net sales $1.1 billion versus $1.19 from the prior year out there. GoGo, G-O-G-O, down 21% this morning, trading off about $4, trading out at $14.50. The Container Store, TCS, is the ticker symbol. That's trading down 12% off $3 and change. 3D Systems maker Stratasys, SSYS, off about 4%, down $3.70. 3D Systems, Triple D, down 8% this morning. It's down $4 and change. Let me see what their numbers, their revenues generated $147 million versus $102. So nice move over the prior year on the top line out there. That's some pretty good growth. How about 50% growth on the top line? Gap income for the first quarter, $15 million versus $18. So they must be on a spending spree out there. That's what's going on inside the markets. So, just back to the ES Mini out here, because I was running out of time going into that last break out here. What took place yesterday so we got truly the fight is between the tortoise and the hare out here. It is truly between the bulls and the bears, and we've got divergence in the marketplace. You've got an S&P 500 and you've got a Dow that is saying, I don't want lower price. I mean, it does not get any clearer than that. Likewise, you've got a Russell 2000 and an NDX 100 that is saying, I do want lower price out here. And so, in essence, you got about 530 stocks going against 5,000. I mean, that's really the numbers, in essence, that we're looking at out here. And which one is going to win, I don't know. But what I do know is that we need to be paying attention to both, because we're going to need to learn both from what is going on inside the weak indices, and are they continuing to be weak, or are they starting to get strong? What is going on inside the strong indices? Are they continuing to motor on through hurdles out here? And in the case of the ES Mini, it's got several hurdles that it has to plow through. It's got several key reversal sessions. It's got several bearish engulfing sessions. It says that the ES Mini, in order to be able to get into nice big wins behind its back out here, it needs to get above the April 4th high. That's at a price point of $1892.50. If it can get above $1892.50, it'll be sailing the ocean's blue out to about price level of $1957 out there. That's at 112-point consolidation level. Likewise, at this stage, one has to assume that is where the bears are camped out at. They're camped out. They're flanked in a couple of different areas. They're flanked here. There's two positions that they're holding. The bears are holding the positions up at about 1882 and a quarter. They're also hanging out at the price level of about $1892.50. That's where the bears are camped out. If I go down and I take a look at an intraday chart, though, so I'll do that. We'll take a look at the ES Mini. I'm just going to stick here because I can give you the numbers to be paying attention to, or at least what I think one should be paying attention to. And now I'm going to go ahead and I'm going to pull up the shorter-term chart so that I can find my 30-minute chart. It's got to be right in front of my eyes out here. Here we go. Here's the ES Mini. What's the number to be paying attention to out here? I believe it's 1879, 1878.75 out there. If you see a close above 1878.75, not like at 1879, but, you know, close with some conviction out here. I can tell you that the S&P 500 is saying it's going to go attack the bears position up at those levels that I gave you earlier. Not just attack them. It would almost indicate to me that, it would indicate to me that it's likely going to go ahead and be able to overrun them. So you're at 1872 right now. The next 7 points inside the ES Mini to the upside will be very telling with regard to the market. That's from a strength standpoint. That's what it is that you want to be taking a look at. You see, if you're short the market, wherever it is you might be short, and you see a move above, I'm going to say 1879, but of course I gave you what, that 1882-ish level out there. Make sure that if those areas get clear, that if you don't have stops in place, please, by all means, get some type of stop in place out there, because when you start to get a close above that, the strength is going to start saying it's going to lift the tide out here. It's going to lift the tide. That's the message. We're not there yet, but at least I can tell you what it is that you need to be focused on and paying attention to. Likewise, we want to also go see what's going to happen when it comes to the week charts out here. And so that means, when I take a look at what's going on inside the NASDAQ on the 120-minute chart out here, just as I said yesterday, we saw the Dow give the actual reversal signal from strong hands. There was no price relative strength divergent pattern inside of the NASDAQ out here. So was the Dow, in my opinion, that truly did raise the tide out here. But right now, the NASDAQ on the 120-minute time frame, it's in bullish mode on its 120-minute chart. It's got to take out, let me get my crosshair out here, it makes it a little bit easier for me. It needs to take out this little bearish engulfing candle. If you're wondering where the bears may be flanked out, they took a position out here at about 35.6250. So that is about another 8 points north of that. If, in fact, the NASDAQ is able to clear that, the NASDAQ's able to clear that, then it wants to travel up to the next flank position. That's the bearish engulfing candle that took place here at about 10 o'clock in the morning. That was on April the 24th. And that price range, the high out there is 36.18, and that's what it would be communicating to us. So unless we see a reversal of fortune, and all those reversals of fortune have really been coming from the NASDAQ and from the Russell 2000, unless we see that, and I'll go ahead and put the Russell 2000 chart on my screen here right now. Now this is a slight delay. This is a 10-minute delay on the Russell, so my apologies for that. I just don't feel like paying the extra feed. But at this stage here, it's about to give us a nice little bullish crossover as well. This says that the Russell would probably travel into about the 1140-ish area would be its target. It's at 1120 right now. And the Russell 2000 is right now leading the charge to the upside. The Russell 2000 has arguably been the weakest of the four indexes out here. So it's leading the charge. In fact, if we switch over and we take a look at the ETF structure, let me go ahead and do that for the moment. Let's go take a look at the ETFs. let's take a look at the IWM, just get a feel for what it is doing out here, because this is one that you'll want to go ahead and keep track of and watch. So if we take a look at the IWM, right now what it's trying to do, it's trying to clear its most recent swing point. That swing point was from April the 15th. Now, that swing point had volume of 76 million shares, closed inside it yesterday with 65 million shares. So you closed inside, not you, but price closed inside it with lighter volume. Ordinarily, that would say you're going to go test the low, 108.66. But if you, the whole purpose of why I want you to focus on what's going on inside the futures market and different patterns that are out there is to fill that void of price so you can get a better feel as to different patterns that are forming out there, because it will help you in being able to navigate these very difficult waters out here where we're seeing such reversals. That's why you want to be able to find some patterns that are working on a consistent base. That's really what it is. You know, we've got tools in our tool chest out there, and you want to be able to have multiple tools to be able to work in different types of trading markets out here. They won't work at all times. You want to be able to find tools that will work for you. So at this stage here, what we know about the Russell 2000, we know about the IWM, is yesterday price closed inside and was pushing lower into a swing point with lighter volume. In fact, it was really sort of pushing into two swing points with lighter volume, right? Because if you take a look at the swing point I take that back. The February 5th swing point had about 60 million shares. You know, yesterday was 65 million shares, but it never did get down there. I'm just looking at the current battle lines out here. Now, if, in fact, the IWM is unable to get above the April 15th high, by all means it should be able to do that. That's at a price point of 111.72. And then it's saying, God, it doesn't really even have enough strength to get outside of its own ditch, because that would be the ditch that it would be in out here. So we'll see, you know, if as it tries to rock back and forth, if it can clear that. Today, if you get a close above 111.72, that at least sets up a move probably into the top of the swing point area from April 22nd, somewhere around 113.47 to 115.02 out there. And that's what's going on inside of the IWM. Let's go check out, we didn't take a look at silver. We looked at gold. Let's look at silver, light sweet crude. Let's go see what they are doing. Silver also having a little trend line. Its trend line here, short-term trend line is what we're looking at. That's from the March 14th high. $21.79 is the first touch point. The second being the candle formation, the high, the emotion, the wick of the April 10th level. That's at $20.40. You can see that price yesterday closed back underneath that trend. It is trading underneath that trend line here today. What the silver needs to do is not just break that trend, but much like the IWM, needs to break outside of its swing point to give you some type of conviction. And that's what's so important. That's why it's so important to watch that swing point, because you want to learn from weakness and then go pay attention to what's going on inside of the strong index. Well, inside of silver, it really needs to break outside of its December 31st swing point. That's a dangerous swing point that it's trading in right now. That level that it needs to break out of, not just break the trend, but break that horizontal level of resistance. That's at $19.85. You're $19.47 as we speak right now. Light sweet crude, I was bouncing earlier. Let's go see where it's trading at right now. It looks like it is, light sweet crude is up $1.27. Yesterday, what did we show you? Yesterday we showed you this rising price channel out here. And really the suggestion was, hey, if you're short, make sure you are really tightening up your stops. Why? Well, because this rising price channel out here, which began forming in the early part of January, has held really well. And price came right down into it. It came right to the 0.618 retracement of its last move out here. That's the move off of the low of April 2nd's low out at $98.15, out to the high that was put in here at 104.10. So you had a nice retracement, a nice 0.618 retracement. You know, your Fibonacci numbers, they are very important for us to pay attention to. And what happened yesterday? That trend held. Now what we're seeing is we're seeing a bounce. Let's go take a look at where can this bounce take us to. Well, number one, you want to watch what happens as you get inside that little doji candle at swing point high from April the 16th out there. The low of that is 102.43. Just like the IW, and you want to take a look at volume. Well, volume up there, only 138,000 contracts. What has it done so far today? It's done a total of 73,000 contracts. If price can close in there, and you're approaching that area with volume, man, that sets up a run for the highs again. If we take a look at just swing points, and you want to watch how light sweet crude is traveling today. Boy, it's crushed through the .382 retracement thus far today with a nice wide-ranging bar out here. That says 102.66. Its .618 retracement is a very likely outcome. If it moves into that area, in fact, if it moves in that area today, a wide-ranging bar, that would say what? I would say it wants to go test the highs. Why? Because the low of that swing point, which is 102.43 from April 16th, you will see it close inside that, and it would be coming in there with a wide-ranging bar out there. Now, light sweet crude, as I pointed out yesterday, it is a vehicle that each of us want to take a look at. Where is it that we can short from? Because over the long haul, at least the big money out there is placing large positions, not a bet, large positions, the light sweet crude will go ahead and trade lower. But as we speak here right now, it's going to need to break this little rising price channel, and that will be your signal that light sweet crude wants to trade lower. We are not there just yet. Let's go take a look at some stocks here. Let's go see what some stocks are doing, popping and dropping. When we get back from our first breakout here, we'll take a look at Waters Corp. WAT is the ticker symbol. We'll take a look at Chart Industries, GTLS. Both of those are down over $7 this morning. And then we'll come back, and let's go have some Buffalo Wild Wings out here. Up 5%, up $7.11. What's your favorite wing sauce? Mine is a combination of barbecue with just that normal, orangey buffalo hot sauce out there. Try that combination the next time you have chicken wings. Dow's up 79, S&P up 8. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Dow's up 86, S&P is up 9, Composite up 22 points, and again, leading the charge. The upside is the Russell 2000 up 0.7%. Now, full disclosure, as you know, I've been both long and short in this marketplace. We went long inside the newsletter. That was back on April the 14th. We closed out that position and we flipped it and we went short. We went short the small caps. By the way, the Russell 2000. We went short on April the 25th, is my recollection out there, and we went ahead. We closed out that trade for, I don't know, about a 4% profit, about a 0.5% reward to risk out there. We did that this morning, and the clients either did that at the pre-market. I gave them the instructions at about 8 o'clock this morning to close out the trade in the pre-market if they wanted, or right at the open, which was really about a 3 or 4 cent price difference out there. And as we speak right now, we are neutral. So I've got a couple positions, but with regard to the indexes, we are completely flat as we speak. Before I take another long position out here, I want some further evidence, and I want to see things get through some resistance areas out here. So that's where we're at inside the newsletter. If you haven't had a chance to utilize Mastering Probability, just go to the homepage of TFNN.com. You know, it's really not what it costs you. What it costs you is basically $3 a day, especially if you signed up for that great Tiger Dollar promotion program that we had here at TFNN. And, you know, it's been for every $10,000 that you've got at risk out there or invested in the market, it's producing $9.50 per day on average out there. So, you know, if you got $100,000, that's $95 versus a $3. You know, and if you don't use Tiger Dollars, it costs you less than $5 a day out there. So less than a Cofa Mocha, La Cafe, Laca, Jaka, which you can tell I'm not a coffee drinker out here. That has nothing to do with the energy. I don't need coffee or tea to get my energy levels up here. In any event, let's go take a look at some of these stocks that are moving and grooving to the upside, to the downside here. I won't have a lot of time left, but let's take a look at one. Let's take a look at Waters Corp out here, down 7% with volume, wide-ranging bar. Remember, always fill in those gaps. In fact, go back to the close of the prior candle and then just simply fill that in. If we do that here real quickly for you, you can see what I'm talking about here. You know, we're all visual. It is all really about being visual. If I go ahead and I color that in, and we color that in with a red look out here, you can see that is a super wide-ranging bar, in essence, that is formed here this morning on the way down. Very wide-ranging bar. Versus looking at it like that, it might not look as wide-ranging to you. So fill those in if you can't visually do that. So what does that mean? Coming off of the lows out here, and your swing point on any type of reversal to the upside or the downside, that's really your target. That's where its first target is. That's WAT, that is Waters Corp. That means that the Waters Corp ought to target the December 11th area, somewhere between 94.50 and 97.20. I would say, because of the volume coming out of this, because of the wide-ranging bar, that it very likely will be an expansion of that it will bust through that area. Now, I don't know for that for sure. And we need to see what volume is as it approaches there. But if it's with more than 1.1 million shares, 1.2 million shares, then what will happen is it'll probably move all the way back down to this high volume breakout. Its next swing points back in the April 23rd level between about 89.23 and 95.52. Let's see if we can fit Buffalo Wild Wings in here real quickly. BWLD, that is taken off this morning. It's up $14 and change, but looks like it's got some resistance overhead. So I'll have to do this during the next hour. Folks, if you're off to start your, what is it, It's Tuesday. It's Terrific Tuesday. Have a great day. As always, thanks so much for joining us here at TFNN. We truly do appreciate it. Have a great Tuesday. Look forward to seeing you tomorrow morning, or maybe in just a few when we do the Money Masters show. Take care, folks.
Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.